Now, here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally. And tonight, we're all about governance. Coming up, three of our most senior leaders talk through the new and demanding pressures on directors and management as companies pull up their socks after the Royal Commission and try to keep up with the ever-changing community expectations. ANZ Chair David Gonski, Australian Super Chair Heather Ridout and Board Director Penny Bingham-Hall, all at the AICD Summit today. Deloitte Access Economics' Chris Richardson joins me live to explain the impact of the new Indonesian Free Trade Agreement and what to expect in next month's federal budget. And how can Australia fix this ongoing problem of wealth inequality? Will the budget do very much? The Australian Council of Social Services Chief Cassandra Goldie joins us live to share what she thinks would be a start. 1,500 leaders, all in a room together, directors of companies from listed to private, government and not-for-profit, all there to listen to the most experienced directors in Australia about the huge questions and challenges that boards have today. The Australian Institute of Company Directors Annual Governance Summit, never a more important time, you'd think. The Royal Commission has reset the bar on behaviour and accountability. Regulators will litigate first. Then there's the change in community expectations on climate and in other areas too. What about wealth inequality and low wages growth? And all this at a time when industry super is becoming a highly influential shareholder in boardrooms across Australia. I was joined on stage by David Gonski, the chair of ANZ Bank, Heather Ridout, the chair of Australian Super, and Penny Bingham-Hall, director at BlueScope, Fortescue and Dexus. I started off by asking David Gonski what had gone wrong.
Can I just say, firstly, I think it's very bold for me to talk about where the ball was dropped for everybody. What I've done in my board at the ANZ Bank is we've actually sat down and thought about, where did we go wrong? And I think, by the way, many of the things that I'm going to mention to you in a second were well explained by Commissioner Hayne in the Royal Commission. I wanted to raise three things which feel to me as though something we could have done better. First is thinking in the long term. There is absolutely no doubt, and by the way, I know we weren't alone in this, that we did from time to time think short term, find fixes to things which fix things quickly, which is what we're asked to do, obviously, but didn't think through in the longer term. It's interesting, I have no doubts that when you talk about customer obligations, when you talk about your obligations to society, when you talk about thinking in the long term, all of that comes into place. And if I can, I was very happy to hear Angus a little bit earlier say that the AICD, which I really believe in, and obviously we all do, is not advocating for new laws. If we look to the long term, in the old laws, it allows you absolutely to focus on all the stakeholders, not just your shareholders. The second thing we felt, and we had started on this before the Royal Commission, is that many organisations become incredibly complex. We as a bank were offering, for example, retail services in Australia and New Zealand, which obviously we've done for many years, and we're very proud of our service there. But basically, we're also doing it all over Asia. When you become complex like that, with lots of subsidiaries, lots of endeavours, that puts a lot of stress on both the decision-making, but also the way the organisation works. And our CEO, I think, explained it very well in the Royal Commission. Complexity is something that if you do it, it's fine, but you've got to do it well. And we felt perhaps we'd got too complex and have taken steps already to do that. And the final thing, which has already been mentioned, I must say, by John and Angus, is accountability. I have absolutely no doubt that our over 40,000 people who work at ANZ are overall extremely good people. And indeed, we do have a compliance culture. But we are not great, I think, or haven't been great, on accountability all the way down. When something goes wrong, correctly, we seek to fix it. And by the way, we'll continue to do that. But at times you have to find who's accountable and act upon it. And if you look back, I'm not sure we, and I don't think we're alone, did that superbly. The coming of the BEAR legislation, which, by the way, I believe will be extended way beyond just the financial institutions, allowed us to map accountability, right from the top, right down to the bottom. And so I believe, Ticky, and I can see I'm getting a bit of a wind-up here, so forgive me, if you look at the three things, to look long-term, to basically get complexity under control, and finally to have accountability, I think we would be much better, and I suspect that might apply to many.
Three very good points. Heather, can I ask you to pick up on the first one, which is short-termism? I see Greg Combay today, who chairs IFM Australia, Industry Super Australia, talking about the same thing, short-termism. We've talked about this over and over again, about the returns, and it's driven by investors. How can we unlock that, what seems to be vicious cycle?
Well, good morning, ladies and gentlemen. It's good to be here. Look, I think Australian Super, we come at it from two directions. As a financial institution ourselves, we've been through the Royal Commission, we've been through the CBA APRA reporting thing. I mean, we've been doing a deep dive into ourselves, and we also come at it as an investor. So, and Greg Combay this morning, I say, is the chief sort of policy-making body for the industry funds. He has some views about that. As an investor, Australian Super has been growing very fast. David was talking about the complexity at the ANZ. We're a smaller organisation. We have about 750 people, but we've grown assets under management hugely in a hurry. We were only created 12 years ago with about $18 billion under management. We now have $145 billion under management. In 5 years' time, we'll have $250 billion under management.
So you follow the money, you follow the power.
And we have internalised. We're internalising the management of that. So managing complexity is a very, very big issue for a growing organisation as well as for one that's already large. But as an investor, we've been developing asset management principles, asset ownership principles when we actually move in and own an organisation such as Ausgrid. You know, we bought into Ausgrid with IFM, we own Ausgrid. And there are only guidelines so far, but we're developing them. And one of them is that you have to manage an asset, the board has to manage an asset with a view to long-term value. We do not go into ownership of Ausgrid with a view to putting the lipstick on the pig and selling it in 5 years' time. We intend to own that asset for 40 years plus. And get utility-style returns for our members as part of our asset allocation arrangements during that time. So we will go through a transformation of that company, and it's not easy, but so we're trying to take the short-termism out of those decisions and manage for the long term.
You could argue, though, Ausgrid is the sort of company that should be held for the long term if you're going to do a big transformation, well, I mean, and it reflects superannuation.
But you take our interest in Healthscope. We're already big owners of Healthscope. We wanted to increase our share in Healthscope. We do not go in with a short-term view to take big stakes in companies.
I'll come back to Healthscope.
So, but I think the investors that I'm talking about are longer-term investors. They are not the...
Well, let me pull Penny in here because different sort of investors you might have, looking at the sort of companies that you're involved with, like BlueScope and Dexus. How do you deal with the pressure for short-term returns?
Well, I think when you're involved in companies that have long-term assets, which the companies I'm involved with do, you're always planning for the long term. It is interesting when you go around, and as chair of REM committee on some of these companies, you get the opportunity to go and talk to some of the investors and proxy advisors at least once a year, and it is always a bit of an interesting debate with them about the short-term returns. But I think the other thing companies need to do is to say, well, you know, what does our register look like? Because if we're in a business making investment decisions for the long term and you have a lot of short-term investors on your register, then you really need to think about how you can go out and sell your long-term value proposition to long-term investors. There are plenty of investors out there in the market.
Do you need to manage your register?
Look, I think it's something that we're talking about, certainly at the board level, to say, you know, you can't choose who your investors are, but it's really, I guess, how you're selling the value proposition of your company. And if you're a long-term business making decisions about the long term, then you do want to have investors who are going to be there along the ride for the long term.
All right. Let me move to customers. Everyone's talking about customers as such an important thing. I know Angus clarified, and David did too, that the message from the AICD is not to change the law in terms of having some sort of social licence to operate. Nevertheless, in terms of board makeup, David, boards have been seen in the last few months in particular as somewhat arrogant, aloof, not connected to the grassroots. What do you do about that?
Well, let me start, Ticky, by saying anybody who sits on a board who is arrogant or aloof is a fool. I mean, the fact is that it's a very difficult job, and I think that one sits there and basically is there at the behest of the shareholders and involved with all the stakeholders. And therefore, you know, frankly, arrogance is not to be brought in there and really shouldn't be part of one's makeup anyway. In terms of who should be on the boards and how one should do it, I have very strong views that, and most people here would be the same, I'm sure, that to be on a board you need some general knowledge, etc., of how boards work. It has been put quite correctly that how do we, and particularly people of my age, know what's going on in different age groups, know what's going on in the world in different geographies, and indeed what people want in the street. And I think it's incumbent on us, both as boards and also management, to put in situations that allow us to tap and find out what's going on, which, by the way, is not revolutionary. People have been doing this with their businesses for years.
What about the idea of, which has been thrown up, I know, Deanne Stewart, new head of First State Super, for example, she'd say, well, put someone on the board who is out there as a customer, who actually can tell you, look, this is actually going wrong now and it's not being put right as everybody thinks it is time-wise. Why not have either maybe a low-ranking employee or somebody out in the community directly sitting on the board to tell you face-to-face?
Well, the first thing I would say in my experience is that once somebody sits in a committee, it doesn't have to be a board, they lose that objectivity of being outside. And in the old days, when I was in the deal-making business, and many of you will appreciate this, it was always our wish to get somebody in the tent doing something out from that tent, rather than to have them doing it to us from outside the tent. In my opinion, very strongly, we do need, Diane's right, we do need to listen. We do need to allow ourselves the privilege of hearing what's going on. But we need to find techniques. It's not right just to bring somebody into a boardroom and ask them to, you know, battle their claim. That's not the way to do it. We could have independent committees. For example, the ABC has a separate committee of viewers, listeners, and so on. We can do it with all the new technologies. You can do polls on whatever you like. And indeed, management does it anyway.
Heather, do you agree with that?
Well, I mean, I think it's a very interesting issue. There's been a very vibrant debate, which all of you will be aware of over the last few years, about industry funds and their quite unorthodox governance model, i.e. not having enough independent directors and having representative boards of shareholders dominating the boards. And frankly, I think on reflection, and we've all reflected a lot about this, one of the fundamental strengths, and Deanne Stewart's worked it out, having moved from MetLife to First State Super, is that having member representatives on the board, people whose skin is very much in the game, who are representing hundreds of workers who have their money in our fund, it's a very grounding proposition. And whilst it has its own issues and challenges, I think it has served the industry super network extremely well. And, you know, that said, the fund has to supplement that group with specialist knowledge. And for example, on our investment committee, we have a range of external specialists. The business side of it brings people with public board experience to the task. On our services committee and products committee, we have experts who understand digital etc. So we have a different model of governance, and whilst it's been not particularly in accord with some of the AICD ways of thinking, it's perversely generated, in the view of the Hayne Royal Commission, frankly, a much better outcome. And I think I make one other comment about this customer fixation. I think the fixation with customers has been seen as a way to make more money, right? I think, and it hasn't really been about the customer. It's been about making more money. And if you genuinely put the customer first, that sort of comes in next. Well, and if it's a business strategy to do that, I mean, you can get alignment, and you will get alignment in most cases, but it's different than saying, so I'm going to do the right thing by my
Penny,
customers.
for example, is not facing customers directly. You're not a B2C, you're B2B. How do you reflect on getting that culture right, and what the lessons have been for your boards from Hayne?
Yeah, look, I think it certainly heightened the awareness that in a B2B we probably haven't been listening as closely as we should to customer feedback. Most of my businesses have customer forums, so there is certainly the voice of the customer going back to management. I'm not sure we've been as good as we should have been at having that coming back to the board.
Do you go out and kick the tyres? Are you allowed to?
Oh, absolutely. And to me, that's one of the biggest signs of culture when you join a board, is how comfortable the management team is for you to go out unescorted to the operations. I'm quite fortunate, the boards that I'm on, I can go and visit a mine site, a construction site, a manufacturing facility. And to me, it's one of the best ways of reading the culture of the company. And I find it very rewarding. It's an important way, I think, to really understand your safety obligations as a director, because you must understand the risks in your workplace, and the sort of businesses I'm involved with are inherently high risk. But you get around and talk to the employees, you get a very good sense of what the culture is. Surprisingly, they're generally quite unafraid to tell you if they're not happy about things. And we also get the opportunity to go to customer functions when we're travelling around, which I find fantastic. BlueScope does that very well, particularly when we travel overseas, where we will sit down with customers, and generally speaking, the country manager says, we have our directors here. If there's anything that you don't like about what we do, you'll find one sitting near you. Please talk to them about it.
After the break, the conversations around corporate governance continues. How important is ESG? We'll find out next.
You're watching Ticky on Your Money. Now, back to Ticky.
Welcome back. Just taking you back to the AICD Governance Summit now. I picked up by asking Australian Super's Heather Ridout about environment, social and governance, ESG.
We put an investment lens over most of our ESG type decisions. And when we put that investment lens over it, going to Penny's point, they usually line up. Good returns and good management, good culture tend to line up. In relation to the Climate 100 group, Australian Super also, we take an engagement approach rather than activist approach in terms of how we deal with companies. And we had something like 279 meetings with companies last year. We vote all our own stock. And so we would rather sit down and talk to a company and try to understand where they're coming from. And for example, we've talked to BHP about Samarco. We've talked to BHP about their tax practices. And we'll probably talk to BHP about their work practices, because in any discussion and any asset principles, management principles we have, treating employees well is obviously part of that. But we've got very comfortable with BHP, and in fact Andrew Mackenzie came to our board, so we actively engage rather than threaten companies, and I think that is the best approach to take and has worked for Australian Super.
But would you agree with the Treasurer today, who says superannuation is not a platform for pushing the industrial relations agenda?
Well, look, I'm not going to... I frankly think, along with immigration and climate change, superannuation should be a bipartisan approach, because it's a long-term investment by Australians, and it's a long-term issue for Australia in terms of economic development. And I don't think we should be dragged into political debates.
But I ask this because wealth inequality is one of the great issues of our time. It's up there with climate change.
Yeah.
Now, at what point should boards particular boards of superannuation funds. Sorry to press you.
We will not be dragged into industrial relations. As the representatives of the unions and employers, when they walk through the door of the boardroom in Australian Super, they take off their hat and they become a trustee of Australian Super, and they have a fiduciary duty to the members of the fund. And as a chair of that fund, and I mean, I must say, I've always seen the hats taken off. It's been a very successful discussion.
I can tell you, Heather, I spoke to Innes Willox this week, who's on your board. He's got very strong views about the fact that the ACTU and wages shouldn't be anywhere near this. Dan Walton, also on your board, AW, completely different idea.
Yeah.
So.
Well, they can have their views. They're cats and dogs, employers and unions. and I think, frankly, the government is relying on that. The government doesn't like the trade union movement, and they probably absolutely, you know, it's kind of antithetical to everything that they believe in, that the union movement would have some influence, a degree of influence over you know, a very sizable $1 trillion plus in assets. But, you know, you have to trust the governance model. You have to trust the ethics and integrity. You have to trust the regulators, and that we are, I frankly think, over-operated as Australian Super, and we're quite happy to be.
All right, David, do you agree with this? Where do you worry about this pressure, particularly on the industrial relations side?
Can I start with the premise that I believe every single shareholder in any company I'm on the board of is entitled to have their view and to put it to us. And I want to put it on record. We were at least a couple of those 279 meetings, maybe 3 or 4. I find Australian Super an excellent shareholder. It is fantastic to be able to debate it, and you have first-rate people who do their homework before we come in. But the ultimate decision is ours as a board of directors. And I just want to make it also clear, and by the way, this relates, and I don't know whether you're going to go there, to annual elections for directors. I feel it's very important that we see ourselves as working for the long term and doing our best for the long term, which means we're not just there to do things that shareholders will vote for and be happy just all the time, and we're not just there to do short-term fixes. That means we listen to what people have to do. I get a lot of letters as chairman of the bank. I read them all. I find them very interesting. And indeed, often they stimulate ideas. I table quite a number to my fellow board members. But it's our decision how we spend the money of the company. And if we do it wrongly, it's our accountability. So I actually welcome Aussie Super as a large shareholder of ours, and I look forward, maybe we'll get some more meetings than the 279, etc.
As many as you want, David.
Penny, can I ask you, where do you sit on just community expectations and whether there is a slippery slope and there are some things that there shouldn't be pressure on, or whether you just got to move with the times?
Look, I think part of the role of a non-executive director is to bring a balanced view. And you've got to balance up a whole range of things that are company-specific, trends in the community, what the investment community is bringing to you. And there's no doubt in recent years there's been a lot of pressure from the investment community around how we're dealing with climate change, you know, what are you doing to reduce emissions, all those things. And like, I think that's been a good thing. It's been a good debate, and I'll be bold enough to say I think most big companies have actually done a lot more around addressing the risks and the opportunities of climate change than probably our
but what about wealth
inequality?
Isn't this the sleeping giant that's going to come your way at the top end of town?
Yeah, look, it is a very challenging one, and I was talking to one of my investors recently about that, where we were talking about remuneration and talking about, you know, our CEOs overpaid, and, you know, I think where you're going in terms of how does that relate to the average wage, and it is very challenging. I don't think there's any easy answer to that, particularly when you're working in multinational companies where you're dealing with different remuneration structures, say in the US compared to Asia, compared to Australia. So I think it's something we've all got to be very cognizant of. You obviously want to have a wages base which is efficient, I suppose. I mean, we want to be competitive in a global sense, and, you know, generally speaking, wages in Australia at a global level aren't bad, but there is still a big gap between what the CEO gets paid and what the average worker gets paid.
Would you all be comfortable with Labor's policy of making it transparent how many times a CEO's salary is to the median wage of a worker?
I don't think it's hard to work it out.
No, but there's a difference between actually putting it out there and having to rifle through and work it out. Would you be open to that?
Well, can I say, I'm open to the calculation. I agree 100% with Penny. I mean, all you have to do is Google what the base salary is and divide it into what we declare as the CEO, and you can work it out. What I would be really against is if it was legislated, and there are jurisdictions in the world in relation to banking where they do legislate that it can't be higher than a certain ratio. I don't believe we should do that. I believe people are entitled to have us accountable for remuneration. They're entitled to debate new remuneration, and shareholders are entitled to vote one way or the other. But it should be left to the companies how to do
David,
it.
you sit on so many, or have sat on so many different boards. Is there evidence that Australia has missed out in terms of management CEO opportunities because of this feeling that we've got to keep salaries down?
I'm not aware of that, to be honest, but can I just say there's something else that we might miss out on. I really believe that, many of the CEOs that we've seen in the years gone by have been superb, some have been not superb. But I think knocking the role of a CEO, to use that Australian phrase, could well stop people from overseas wanting to come here. I think, to me, that's more important than this question of remuneration.
Heather, look, my feeling about remuneration is that what investors like ours are looking for is very clear, transparent remuneration structures. They want to know what makes up the philosophy behind the pay, the STI, the part at risk, and the LTI. I think there's not enough transparency and not enough clarity to investors around this space. And I think if companies did more of that and send very clear signals to investors about how they actually structure the remuneration, what is behind their thinking, and then gave very clear signals about alignment and then implementation and execution against that, we would clear up a lot of these issues. And we come, for example, a lot of companies they want to combine their STI and LTIs. And really, they don't always indicate very clearly how the LTI component is actually looked after in this combined STI-LTI arrangement. So it's almost an extended STI arrangement, and then they run into trouble. So I think there can be a very constructive discussion over the next few years about how this can happen better, and I think we're seeing quite a few
because
good
industry
examples
funds obviously have made a name for themselves as deliverers of low fees service, right?
Yes.
So will industry funds be looking at pushing that message, perhaps?
Look, I think in terms of...
all the way up to the top?
The Australian super is dealing with costs in a range of ways. I mean, we've internalised about a third of our assets under management, and that's taken about 10 basis points of our cost of our MER, and we'll continue to do that. We also put pressure on fund managers who have been really doing very well out of superannuation funds for a very long time, so that will happen as well. And then we're attacking the efficiency of our own operations. We're digitalising a lot of our interactions. And coming to culture, one of the things I would raise is that in this digital age where people don't even know half the time whether they're talking to a machine or a person, how we're going to manage culture in that environment. We're already seeing some of those risks like data security, etc. come through. So I think, these issues are very, very alive.
All right. David, can I ask you about accountability and board relationship with the regulator? Now, it doesn't matter whether it's, say, CBA with Austrac, NAB, AMP, IOOF. I mean, there are some very, very big companies which have got into trouble here in recent months. How should boards look at handling an increasingly litigious regulator?
Well, the first thing is, it's up to other boards how they do it. I can tell you how I look at it. I respect the regulator, and I sincerely hope that that respect would come the other way as well. And by the way, those who disrespect the regulator, I think, are fools. They basically have a job to do. They're representing the people just as we represent our shareholders. And in my opinion, they should be taken seriously. They should be allowed to work with you towards the common cause of basically making sure that things are done right. And in my opinion, where there is respect, sure, there will be times when one disagrees with each other. There will be times when mistakes are made, or indeed even worse than that. But you work together to try and do, in my opinion, the best. And if you look back right through, and I've been around for almost 100 years, but you know what I'm saying. I think most of the problems have occurred where basically that respect, that working together hasn't been there.
So going forward, we've got BEAR, which you say may creep into the corporate world more generally. It's likely. We've got an increasingly litigious litigator who's got riding instructions from Kenneth Hayne. You say no to annual elections of directors. How do you see the landscape 12 months' time, 24 months' time for boards?
Well, firstly, and I think it's fabulous that there's 1,500 people here. I want to make it absolutely clear that being a director is not an easy job, as Penny said earlier, and quite correct, and it's getting more difficult. But it's a wonderful job. It's a job, I think, where you can bring your own thinking, where you can be part of a team, and where you can lead towards a wonderful result. So where do I see things in 12 to 18 months, 24 months? Well, I'm an optimist. I hope that we will, to the extent it's required, pick up our game, that we will look further out in terms of long-termism. I hope that people will begin, and I hope it'll be soon, to realise we've got to work together in this country, not knock each side of the, we shouldn't be anti the politicians and they shouldn't be anti us. We've got a small but wonderful country that we've got to move on. And so my feeling, and I may be others who are more cynical may feel differently, 2-3 years out, I hope we will return to an equilibrium where, with respect, we are working well together with the regulators. And sure, if we step out of line, they will be suing us. We may fight it if we disagree. If we've done something wrong, we will be found to be wrong. And finally, I would say, is that most, whether it be not-for-profits, for-profits, government, whatever, we work out with respect how we come together and we continue to move forward rather than sort of passing the parcel and criticising each other.
One of the really interesting things that's happened in the last 12 months is the move by industry super to position themselves on companies. I'm thinking of Aussie Super and Healthscope and Navitas, to tie up with, of all mobs, private equity, and look potentially at taking over a company. Now, this goes to conflicts of interest, potentially at a number of levels. Are we going to see more of this? And how should industry super, for example, see itself? Isn't it a conflict of interest?
Look, I think about 3% of Australian super's funds under management are currently in private equity, and that direct investment PE percentage is going to grow, and it'll grow till 10+% over the next period ahead as our funds under management grow. But we're also quite deliberate about this, and so we take our opportunities, whether it's direct investing ourselves, whether it's co-investing, whether it's joining with BGH like we did. But Healthscope was quite an experiment for Australian Super. We had an existing investment there. It was a good investment. We wanted to increase our investment. This opportunity arose. The investment committee went to huge lengths to avoid conflicts of interest.
But you tied yourself up exclusively. Are we going to see more of this?
Well, I think so. And those exclusive arrangements were done in the interests of the members of Australian Super. And the member first duty is right at the fore of this, and the governance that goes around that is right at the fore of it. So, yes, and one of the things that we did as part of that, we did a very big stakeholder management plan. Now, not many people, not many organisations do that when they're seeking to get engaged in those sorts of issues. The same with WestConnex. A lot of stakeholders are. So I think we're doing this quite deliberately. We're doing a review, for example, of the learnings from Healthscope. So as we build, as I said, Australian Super's problem isn't dealing with the complexity of a big established organisation. Our issue is managing the complexity as we grow and new opportunities. But just because we have to deal with prickly issues, like properly managing conflicts of interest, doesn't mean that we shouldn't do these things. So they can be done, they can be done properly. We have very strict governance around those issues. People,
okay.
You know,
Well,
so
David, what would you say to that? I mean, if you're sitting on the board of HealthScope, you've got some conflicts. The whole board has a conflict there as well. If this becomes, a more common thing, how should boards handle this situation?
Well, firstly, can I deny that I'm on the board of HealthScope? But let me start by saying this. Every shareholder, in my opinion, is entitled to do as they wish in terms of joining with everybody, as long as it is legal and as long as it's not in any sort of breach of what they've said. So, for example, if I, as a shareholder, represent in the Ticky company that I'm going to be there forever, and then I sell out immediately, that is a breach of faith, and that is wrong. I similarly, if I say I'm not going to go into a takeover bid and I mislead the public and the board, that's a problem. But if I am silent on that, I actually believe that the shareholder's entitled to do as they will. And basically, we as a board have to be aware that that can happen.
Mm-hmm. So, and do you see more of it happening?
Oh, absolutely. Yeah. Absolutely. And I think there is a reversion away from listed companies. And by the way, the sadness of that is it diminishes the availability of shares, particularly for the smaller players, because they may not be able to get into the shares because they won't be listed.
Penny, final comment.
Look, I think we're going to see more activity from private equity. It's just the sheer weight of money out there that's coming in. We're seeing it in the property sector in a range of areas where there are a lot more people coming into that space. It's becoming more crowded, and I think as listed companies, you just have to work through the particular opportunity or risk as it comes up and deal with it. I think David sort of talked very eloquently to how you manage those conflicts and staying true to who you are as an organisation.
After the break, how will our free trade agreement with Indonesia impact the economy? Chris Richardson from Deloitte Access Economics coming up next.
This is Ticky on Your Money, covering the big business stories.
Welcome back. Well, Trade Minister Simon Birmingham is a happy man today. He says a new free trade agreement with Indonesia will have benefits for many industries, including agriculture and education. But the ACTU, the union, says the deal may hurt Australian workers, exploit foreign labour and undermine national sovereignty. So what are the experts saying? Chris Richardson is a partner at Deloitte Access Economics. He joins me live from Canberra. Chris, nice to see you there. Now, what sort of impact do you think a free trade agreement with our nearest neighbour will have on the economy?
Look, it's good news, but it's not yet big news. It will be eventually. Indonesia is a massive and young population. Our longer-term estimates see it growing massively as a share of the world economy and indeed as a potential partner for Australia. In many ways, they have things we want. We have things they want. They're a good trade partner for the longer term. It won't, however, be likely to see a massive change overnight. Those trade flows at the moment are pretty small, and these things take time.
Could it become, I mean, as China has been so important to us in terms of their infrastructure build, do you see, you know, in several years out, Indonesia demanding huge critical infrastructure and therefore we being a really important player there?
You think of India, Indonesia and the Philippines as the three young nations, large nations, neighbours in a grand sense of Australia, who have enormous potential off the back of their demographics and where they stand in the development cycle. Those nations will be much more important to us in a decade and much more important again in another decade. They may not, pound for pound, be as great for Australia as the rise of China was. China and its way of getting rich faster was very much about infrastructure. Those other nations, democracies, basically may grow a little slower, but still very, very much good news.
All right, well, upside, if a little far away. Now, since I spoke to you last, of course, talking about our other neighbour, China, and the iron ore price, golly, this must be making a difference to the budget bottom line, isn't it?
Look, very good news. Good news in that as China slows down, it revs up its economy. That stimulus has been going out quite strongly for a while. They are adding to that as the pressures on China's economy rise. And the key to that stimulus is that a lot of it is construction related. So we've had demand for construction rising and hence demand for iron ore. At the same time, that terrible tragedy over in Brazil with the collapse of the dam wall there means that the Brazilians have removed some supply. You're seeing, spot prices in US dollars, $87 today. They were over 90 US dollars a tonne not so long ago. Amid some challenges for the federal budget, that's the key bit of good news.
Yeah. What sort of an impact do you think it's going to make on budget day?
It will be the component that the government will have most to smile about. Equally, there are a bunch of other things. The largest single lever affecting the budget is wages. Treasury still has a forecast for wage growth that really stands out from the pack, stands out from everybody else. We know where the Reserve Bank is. Our views and the Reserve Bank's views are in fact very similar, and that gap is a relevant one in these budget calculations as well. As important as the iron ore price is, and the good news around there, don't forget the bad news on the wages front of this equation.
Yeah, and will one wipe out the other? Can you give us a sense?
Sure. We're still doing the numbers at the moment. It's not clear that the outlook has massively changed.
Right.
In a sense, if you think around the last handful of months on the economy, ever since the budget update came out ahead of Christmas, the news has not been as good in terms of either the global economy or the Australian economy. Globally, China, Germany slowing down. Locally, the acceleration in house price falls. So the economy, you would think, would be net a negative for the budget. It may not be a negative, but it's unlikely to be much of a positive.
And what about any cash splashing? How is that totting up?
It's an election in the offing, Ticky. Regardless of the economy, regardless of the budget, money will get thrown around, and it'll get thrown around in particular in marginal electorates. As has been true for some months, the budget is very close to being in balance. If you look at it on the last 12 months, the government could, if it really wanted, get into surplus this year. It's just my suspicion that the political hardheads will be saying, great, but those dollars, we could get a bigger bang for the buck, more voters basically by using those dollars in marginal electorates rather than, pleasing the economists. We're lovely people, but we're a particularly small number of people in terms of cheer squads and voters.
Right. Now, before I let you go, I must ask you about the other side, and Labour's policy around franking credits, of course, has been hugely controversial. See, we've now got a report by Rice Warner, who might be looking at better ways of structuring this franking credit refund, or banning it, rather. Now, what do you think of that, and what do you think of Labour's policy at the moment?
Look, Rice Warner has some interesting suggestions, and not surprisingly, those suggestions are around superannuation. The basic policy that we have at the moment is a good one, but it's being rorted on an industrial scale. And the rorting is coming through the superannuation system because those benefits are particularly valuable if you own lots of shares, Australian shares, and you have low tax rates. And that's a description of the superannuation system.
So we're talking about large self-managed super?
Yes, though, indeed, the super system in total, not just those self-managed funds, both of them. You know, there's that combination of lots of shares, lots of these franking credits and low rates of tax. A better policy, if you ask me, would have been to reform superannuation and how those credits get used in superannuation rather than perhaps the more scattergun. Having said that, you know, as good as the underlying policy is in theory, I recognise that something needs to be done. It is being rorted.
Yeah, so Rice-Warner's suggestions that maybe you could have do something at the floor level about helping those who would really hurt, but equally to perhaps put in some sort of caps over which, you know, this policy could go through from Labor's point of view.
And those Rice-Warner suggestions, and again, they're very much around superannuation, essentially, and that makes sense. The only thing I would say is that, you know, floors and caps and so on are the hallmarks of a tax policy, and that's what we're talking about here within superannuation, of a tax policy that needs too many band-aids. You know, both sides of politics have run away from more fundamental but also more sustainable reforms of superannuation. You know, it's too late now. That's not the policy that's on the table. What Labor is proposing does fix a bunch of things, but it also creates some new problems at the same time.
Right, well, we'll hit that when we get there, I guess. Chris Richardson, thank you so much for that. Terrific.
Thanks, Ticky.
After the break, what to do about wealth inequality. ACOSS CEO Cassandra Goldie will join me next.
Now, back to Ticky.
Yes, welcome back. Now, wealth inequality, I think, now ranks alongside climate change as the great moral challenge of our time. Soaring property bubbles, which peaked last year, are part of it. But at the bottom end, there's also been little change for those trying to get employment. Jobs have gone up, but trying to get employment. And meanwhile, essential spending on things like utilities, power in particular, still very challenging. For those hoping for change, there's a long to-do list. Cassandra Goldie, CEO of ACOSS, joins me live at the desk. Cassandra, first time speaking to you this year and right ahead of the budget. So just tell me, what are your priorities at the moment?
Well, I think we've got a government that's looking to get some good feedback from the Australian community, and one of our clear messages from all the research we've done is the community is very worried about people who are struggling, you know, people in the community who are doing it tougher. Yes, we're the wealthiest country in the world, above Switzerland as of last year, right? But we've also got big household debt. And for people on low incomes, that bottom 40%, it's low wage growth, and of course social security payments have been frozen.
Yes.
New Start.
Well, this is your number one thing.
Absolutely.
And it's got a lot of support across the board from Chris Richardson, who we just spoke to.
Well, I couldn't hear him. I hoped he was talking about it. Chris is a strong supporter of moving on that, socially and economically.
But you've got deaf ears in Parliament on both sides?
No, we haven't got deaf ears. I'm sure. You know, all the politicians are listening keenly to what will make a difference in the community. And I think for some politicians, they've underestimated the number of people who are affected by what's happening on social security.
But I'm hearing about reviews of New Start.
Sure.
And,
well, it's not good enough. I mean, we've said that to, you know, the opposition as well. I mean, we had a review. Ken Henry ran a review, if you remember, Ticky, where, you know, 2009, Heather Ridout was involved in that one, and they looked at New Start. They said it's too low. It's the lowest unemployment payment in the OECD. Wealthiest country in the world.
Are you expecting to get movement on it at the budget?
Well, look, I'm always going to be here. We are going to be out there again saying on budget night, if it's not there, it is the serious missing in action. You can't have credibility when you're talking about a fair go. Everybody's using that term fairness without tackling New Start. And the other part of it, of course, is housing. I mean, that's where the big squeeze has been for people, particularly people on low and modest incomes.
Is that a state or a federal thing? Well,
look, it's a combination, isn't it? You know, we do need those tax changes that we'd have gone further than Labor, actually. We'd have phased out negative gearing altogether. If we're going to build, we need to build really good stock. that's, you know, good energy efficiency, tailored to social housing, low income, affordable housing in the right locations. So we could do a lot better than the dollars we're losing through those very generous tax concessions, and funneling it into some financial tools to get super funds involved in a big infrastructure plan on housing.
Super, both on the retail side and the industry fund side, are they becoming more interested in this issue of affordable housing?
They're very interested. I mean, you know,
well, are they putting their money behind their interests?
Well, that's a discussion. I mean, I think they are very ready to move on affordable housing, which is the sort of capped rent.
Yeah. But this is the great ESG, age of ESG, isn't it? So
look, it is, but we don't have enough in any of the packages announced by either Labor or certainly on the coalition side as well, which will help for low-income public housing. So that's the big one. And we need a big, you know, multi-billion spend in it, but it would be great for jobs. I mean, that's, you know, both sides of politics like to talk about that. This is about a building program. I think the community is very interested in that, and it makes good fiscal sense as well. You know, we're going to need to see more movement in the economy. Some of the economists are worried about that, aren't they? But we don't want to see any kind of building. We don't want to see the wasteful infrastructure. We want to see debt financing go to really good capital works, and that's obviously public housing.
With on this? Who are you talking to?
Well, look, the community sector is very heavily involved. The super funds, private investors as well. Of course, some private money will, you know, be part of the mix. And we're talking very much to both sides of politics. That's the big spend. Energy, of course, is.
I was going to say, Cassie, what about
that's the hot one, right?
How's the down going? You know, Angus Taylor's down. Are the prices? Are you seeing that on the ground?
Well, look, there were some good measures in that big announcement last week. The move to introduce a sort of a standing offer in the energy market so that we can really know what we're getting for low-income people. Low-income people know what they're getting and that they're getting a good deal from those energy retailers.
There were some people saying, who are resisting this change, saying, oh, well, that means that the really low-income people who have been forced to go out and look for the best deals will actually, they will be the victims now, because the best deals will be withdrawn to fund this new default offer. Well, look, Rod Sims doesn't agree with that. But
no, our view is it's the right direction to go.
Right.
For people on very low incomes, it's incomes policy that's the chronic problem. It is back to social security payments. You know, $40 a day on New Start is not enough. And also energy efficiency. For people on very low incomes, you're in often very poor rental stock. Your energy efficiency, you know, you're trying to cool it down, you're trying to heat it up, but it's all going straight out the window.
Upstairs.
You don't get to put solar on your rooftops. And so that's where a big energy efficiency package would be a real game changer for low income people, and of course for small business owners. They're in the same boat. Of course, they don't have control often over the accommodation that they're in, and they're the ones that are really exposed to big energy use and therefore big bills.
All right, Cassie Goldie, great to talk to you, and look forward to talking to you ahead of the budget as well and after it. Thank you.
Great, thanks.
All right. That's all for the show tonight. Tomorrow night, British historian and political commentator Neil Ferguson joins us direct from the AFR Business Summit. Until then, thanks for your company.